Takahiro Ogawa, Director of Sovereign Ratings at S&P, joins in live on the show. Takahiro, hi. Good afternoon. Thanks for joining in. I know it's a little too early, but following the European election results, are you reassessing the risk of the Asian economies?
I think, as you mentioned, it's too early for us to say anything because the real impact will come later than now. Of course, there are some results which might not be conducive for the euro sovereign crisis, but at this stage we will wait and see what could happen on the risk side of the European sovereign, and then what could be the implication of side of the economies and the sovereign credit.
So what according to you is the risk factor currently in Asia? What might make you reassess the economic outlook in Asia coming from the Eurozone crisis and the debt crisis they're embroiled in right now?
I think potentially there are two sources. One is a financial channel, the other is a macroeconomic channel. And then you see, depending on what will going on in European side, we need to look into it.
So which economy appears to be the most at risk in Asia according to you then?
Those who depend on the macroeconomic condition heavily export to the European zones, and those who are depending heavily on the external funding. Those are the potential the sovereigns which might have more serious implication on their sovereign ratings.
Now that you've revised, let's talk about India as well, because now that you've revised the ratings outlook on India to negative, what's the one most important factor that is going to determine future rating action on India?
I think one of the issues is the implementation of the government, because the government have various reform measures or deregulation measures which have already been announced. But the progress of those key measures are still very slow. So going forward, we are looking forward to what extent the government can mobilize those measures to the actual implementation phase.
Takahiro, there's a view in the market in India that post the budget session we may see some pickup by way of reforms from the government side. Can some movement on particular points by way of allocations to the oil and gas industries and subsidies front as well change the view that S&P has in India?
I think at this stage we see that there is a possibility of the increase of the domestic fuel price. But we don't know whether and to what extent the government can push forward the structure of the subsidy systems, as well as the implementation or introduction of the nationwide the goods and services tax, which could make the more efficient tax collection and more even-footed the sort of the tax rate over the various state governments, which could help the interstate economic activities more vibrant.
Takahiro, the consensus view, at least in the government and a lot of analysts that we've been speaking, is that S&P has been too harsh in its view in India. You've attached too much importance to the country's external trade position and completely ignored the fact that there is going to be strong domestic consumption-led growth.
Yeah, we already taken that into account. Because if you look at India's GDP per capita is very low, actually one of the lowest among the rating category. But because of the faster than average growth, we have still put into the same bracket of the other economies. But on the other hand, we need to look into the other side of the growing economy, which is the very significant need of the infrastructure and other the investment which need the money.